I think the concerns, Sarah, are that we are in a bit of an economic peak. Apple called out some concerns in some of the emerging markets. Some of the data that we've seen in the recent reporting season from some of the semiconductors points to some perhaps broader concerns. However, if we step back and think about what's going on with Apple and really the broader technology space, the key secular trends around cloud, mobility, the build-out of digital infrastructure remain very much in place. So we think Apple, which we're seeing a broadening of the revenue drivers there. Certainly the iPhone, which grew 29%, is very healthy. Services grew over 20%. Wearables grew over 50%. That's doing well. You look at other technology names like Cisco, really an enabler of the next generation and the so-called Internet of Things, really connecting everything. Other names, you look at a Motorola Solutions, which reported good results last night. They're a leader in providing solutions to public safety, and we think they have a lot of growth potential in newer areas like video and analytics, and a significant margin expansion opportunity. So overall, we still see pockets of opportunity here in the technology sector.
You just have to find your spots. I mean, Jordan, is that how you view it, that you're just going to have to be pickier when it comes to secular growth stories, and you can't just rely on a booming global coordinated economic recovery, as Apple reminded us last night?
Well, I think that's definitely true. We're value investors, and we are fundamental bottoms up. So we're always looking at individual companies and not investing top down. That being said, the macro environment for technology customers, the companies and people that are buying technology products, is actually very good. You know, the U.S. economy especially is quite strong. Returns from investing in technology for your business or enabling services for yourself as a consumer are very high. And so there's a good underlying demand for technology. But we would say that each company is individual. And Apple last night, although the quarter, I think, was quite a good quarter, the fourth quarter, the calendar fourth quarter, is not quite as robust, at least compared to expectations. And I think that's really why the stock is down. That being said, we still like Apple a lot at this price, especially the lower price today. Trades at a very modest multiple, about 15 times the current year, and has $25 a share in cash, which would reduce the multiple to about 13 times. Generates a tremendous amount of cash and still has good growth ahead of it. Even in the current fiscal year that just started, even though people are kind of disappointed with Apple, still at least 9% earnings growth going forward.
Big debate on whether this is the signal of some sort of slowdown for Apple or not. Jordan, excuse me, Dan, do you agree with Jordan?
I think
would you buy it?
We do think the shares are attractive if you look out over the next 1 to 2 years. Stepping back, if one thinks about what's going on, we have a $250 billion revenue company growing at 20%, which I think is tremendous. Now, clearly with the compares, growth is likely to slow over the next year. But the key at the end of the day is they're innovating, they're delivering value to their customers. And while people say, well, look at the high price.
They're not going to give us the number of iPhones sold, and that number has been slowing?
No, we don't actually worry about that, because if you look at the revenue performance of the iPhone business growing 29%, that suggests they're delivering value to their customers. And I think we all appreciate that they're going to be third-party sources that can provide some color, if you will, on the number of units. So we think the fundamentals remain sound.